Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. This is a weekly chart of the SPY right here. Man, look at that big red candle right there. We had a very bearish week this past week, but I do not think the fun is over yet. Looking at Market Watch and the calendar, we have no catalyst potential on Monday, no news, nothing scheduled. However, Tuesday and Wednesday will be big days. Okay, 8:30 a.m. we got CPI. That's inflation for us, the consumers. And then on Wednesday, we got PPI. That's inflation for the producers. Okay, both very important data releases coming out. If we see inflation not steadily decreasing or it comes in higher than expected, holy moly, this bearish move that we had recently could possibly continue, guys. So definitely pay attention to that. All right, and as well as PPI, if inflation is high for the producers, it will mostly trickle down to us, the consumers. So definitely big data releases coming out for next week. I'll definitely be talking about it when the day comes. All right, so I want to talk about this big red candle that we had today and how I feel about it and how I will be trading it in the coming days. So let's prepare. So guys, I wrote here in my Discord that I have a bull case and a bear case, and I mentioned in a previous video that Uncle was bearish as long as SPY stayed below 393. Okay, I wrote here bears must defend 393 with 396.5 level as resistance on any bounce to keep the bounce a dead cat. But if bears want to continue the trend move from yesterday, we need to see 391.4 fail to put 390, 388.5, 387, 385-ish in play, okay? Remember I talked to you guys about the head and shoulder pattern, and the neckline was around 383, which, was also aligns with around the 200 daily moving average, okay? And here's a 15-minute chart. And these are all my levels, the pink and yellow lines and the white lines, okay? And it opened up nicely. It broke down the 390 level, okay? SPY opened around 390.99. It broke down 390 and hit that 388.5 support level that I had based around there for a while. We had a lot of buyers around the 388.5 level. And it did manage to recapture 390 intraday, hit the 391.4 level. That was Fibonacci level. Cleared that and it hit the 393 level. Remember, the 393 level was the level from the neckline of the head and shoulder pattern. And look at that. We had a hot stove rejection. A strong hot stove rejection. We know it's a hot stove rejection because it was strong selling pressure. And it was so strong that it broke down the next support level, which was 391.4, giving us a false breakout setup. Okay, so I played, because I was bear biased below 393, I only played the bearish setup. I was able to buy puts, break down to 390, played it level to level 388.5. I played the false breakout of 391.4 because I saw a strong rejection from 393, and then it just continued downward. It was an amazing day. These are all these plays and setups were alerted in the Discord. Okay, now let's get to the big chart, the weekly chart and the daily chart. Okay, I got a naked chart here. I don't have any of my levels, so I'm gonna add some levels and trend lines. So I'll start from all-time high, and then I'll make sure it touches the pivot high here in March, then the pivot high here in August. Okay, that's 3 touches. All right, and we also have a 4th touch, a pivot high here back in November. All right, that's the yearly trend line from all-time high. 1 touch, 2 touch, 3 touch, 4 touch. You can count that as a 5th touch, 6th touch. Many touches off this trend line. Okay, so hopefully you guys can agree with me that this is a legit trend line. Go to the daily chart here. I want to get some more levels from the daily chart because I'm a day trader. I want some levels that are close by that I can use to trade. Excuse me. So I'll add my Fibonacci lines here. So this starts from December 2022 low to February high. So I want to make sure I get the correct pivot lows and pivot high. So December's low was 374.77. So I want to make sure I write that in here. And February high was 418.31. Okay, so I got the exact correct numbers. Okay. Now here's my daily chart. And of course I have this, the moving average. Okay. Boom. That's how I get my levels. You guys just seen it, all right? Now if I move my moving averages real quick, I can show you guys the head and shoulder pattern. This was the left shoulder. This was the head. This was the right shoulder. Right shoulder was an evening star pattern. Okay, now we'll add the neckline. All right, I'll turn it to yellow. Boom. Look at that. Beautiful. Head and shoulder pattern. We broke the neckline. It back tested the neckline as a resistance. Role reversal, guys. A role reversal of the level. When we see a support level break down and then it changes to a resistance level, that's very bearish, okay? Also, we broke back below the yearly trend line. We have a false breakout setup on our hand, okay? Very, very bearish. All right, but as usual, I want to give you guys my analysis from an unbiased perspective. So I'm going to give you guys the bull case and the bear case. All right. As of right now, I'm bearish on it as long as we are below the breakdown of 388. Okay, 388 is based on the white trend line from all-time highs now. Bulls, if you guys want a bounce or a potential reversal, you got to recapture 388. All right, 388 would put 390, 391.4 in a back test of the neckline of the head and shoulder pattern in play. Okay, the neckline is now for Monday would be at 393.17. Okay, so above 393.17 would be a recapture of the neckline and a recapture of the 200 daily moving average. Okay, so multiple reasons why that zone or that level is very important to watch. Bulls must recapture that to be bullish, but it'll start off with with 388. Okay, if they cannot recapture 388, guys, this is the breakdown of the yearly trend line or the false breakout of the yearly trend line stays intact, and it could get a whole lot uglier if CPI and PPI don't come in positive or come in with the CPI showing inflation is lowering, steadily. Because if it doesn't, and the price stays below 388, this could get very bearish. Yes, I know the RSI is oversold, but it can always get more oversold. All right, RSI and other indicators should not be used independently. They should be used in conjunction with the price action. Okay. So as long as below 388, bearish. If it can recapture 388, maybe we get a dead cat bounce, okay? You guys know the levels up that I give you guys, 390, 391.4, and 393. If it can recapture 393, 395, 396.5 will be levels I'll be watching. 396.5 is the 50% fib level. And then the 50 daily moving average is at 398.93. It might move up to 399. All right, but I'm definitely watching the 400 level as well, with the next fib level, critical fib level at 41.68. Okay. Now, as long as price can stay below 388, there is support at around 385.5. as well as the critical one at 384. Now, 384 is the 78.6 fib level. Okay, we got some buying pressure from that zone on Friday. If it breaks down, if we run out of buyers and it breaks down, 384 breaks down, it's going to get a whole lot uglier. That's the loss of another critical level. And we're going to put, I got below 384, I got 382, 380, 378 pivot low. Yep, previous pivot low, 376.5, and then December low at 374.7, okay? So keep it very simple, guys. Below 388, stay bearish. Above 388, we can get a possible dead cat bounce, All right, above 393, I would take the bounce a little more serious and favor more upside. Okay, now before I move on to triple Q, there is one more thing that I want to talk about. Okay, one of the best ways to identify areas of liquidity, because market makers love stop loss hunting, but one of the best ways to identify areas of liquidity is from double tops. Okay, double tops like what we had in December. All right, boom. Usually you see double tops like that. There's a big chance that the area of liquidity up above. Market makers will look to break it out, attack all the stop losses to get people bullish, and then they'll break it back down. Okay, now we check in 2022. This has happened multiple times. We had a double top here back in late April to early May. Double top. And market makers faked this out, went stop loss hunting before they went to a new low. All right? Same thing happened here as well. Double top. Okay? This happened back in early February of 2022. Market makers faked us out, got us bullish, stop loss hunting, and boom, they dropped it down. Each time that happened, SPY went to a lower low. Okay, now we have a case here where we have the same similar setup. Could we get a lower low? All right, so that's just something to watch out for. Okay, I'm not giving any predictions. This is something to watch out for so that we can react unbiasedly. I gave you guys my levels, gave you guys my setups. Now it's up to you guys to do what you will with it. Hopefully you guys end up green, okay? Now triple Q. I have Fibonacci level also from all-time high down to October low, the blue ones, okay? The 23.6 fib levels at 290.7, all right? That's around where triple Q broke down Friday, all right? So as long as below 290.7, I would stay bearish on triple Q. The next fib level that I'm watching, which is a closer, smaller trend Fibonacci from December low to February high, okay? That the next one I'm watching is the 50% fib level at 286.7. All right, that's the next big level I'm watching, as long as below 290.7. All right, there is some support at 288.5. If we break that down and break 286.7 down, that will be very bearish. I'll favor a test of 284.5 in 280 to 281 zone. Okay, now if 290.7 recaptures, that's a false breakdown setup. 293 is in play. If we clear 293, that'll be pretty bullish, and I'll favor 296 and 300, 301 zone being tested. Okay, above 301 would be pretty bullish on triple Q. All right, it'll break out this blue trend line that I have here. Okay, that you guys can see. It connects February 2nd, February 15th, and March 6th high. Okay, fourth touch might be the one to break it out, but it will have to recapture 290.7 first for any bullish momentum to build. As long as below, bears are in control. Just watch the next support levels, okay? IWM, I have fib level from all-time high as well, all the way down to October low. 180, 184 is the 23.6 fib level. I'm going to stay bearish on IWM as long as below that level, okay? Another critical level I'm watching is at 178. All right, purple trend lines here. I had a purple trend line for a downtrend one, connecting August 16th, December 1st, and December 2nd high. Okay, and then I have a purple uptrend one that connects October 13th and December 28th low, and IWM broke down both those trend lines. So to recapture those trend lines, gotta get above 178 to put 181 to 182 zone in play, and 184, and then 185.5 to 186 zone in play. Okay, so the first thing bold need to do for IWM is recapture 178. As long as below 178, the next critical support is at 174.4ish. If that breaks down, we could see more downside starting with 170 and 165.7ish. All right, Tesla, I got the 23.6 fib levels at 175.6. Tesla gave us another close below that level, okay? So I can't get bullish unless 175.6 is recaptured to put 180, 184, and 190.3-ish back in play, all right? Now the next critical support is at 173.5 and 168, 169. All right, if 169 fail, we could see a lot more downside to 166.5, 162.5, and 159.7. Okay, remember, as long as below 175.6s, I am bearish on Tesla. That needs to recapture for me to switch my sentiment. As long as below it, bearish. Apple, I'm bearish on Apple as long as below 150.6. Okay, now there is a level at 149 and 147.5 to watch. If bears want to continue the momentum, they need to break down those levels and break down 146.6, fill the gap around 145.8-ish, and go test 143.5. If bulls want to turn this around, they need to bounce off of these support, especially 149, recapture 151 to trigger more upside up to 154-ish, 155.2-ish, and 156.5-ish. Okay? Now look at VIX. Holy moly. Big pop on the VIX. But that's a long wick as well. Okay. So 38.2 fib level is at 23.8. The VIX is going to have to defend that as support if it wants more upside. If it breaks back below, watch out for the false breakout. And the critical 21.2 level could get tested as support. If it holds, that could be bullish. But if that breaks down as well, we could see some more downside. And maybe we go test 17 and 15.5 this time, okay? DXY still defending that 23.6 fib level at 104.11, okay? So anyone that doubt fib levels, you see the market makers, the the robots, whatever, they're respecting these levels. So as long as DXY is above 104.1, it still have a chance for more upside. If it breaks below, then I would favor more downside. Okay, now let's take a look at the option flow filter for 500k premiums or above. It's 69% in the puts. All right, see, this one was calls. It came in at the end of the day, 1.4 million, over 12,000 in size. They entered around 387.7 with a 399 strike price. Expiration date March 17th. So you can look at where they entered. Maybe you can use it as a support or resistant level, up to you. But that's where they entered, and they're betting for a 399 strike price. That was, calls. Got some more calls here, 388 strike price. They entered around 385.93, over 7,000 in size. More calls here. This came towards the end of the day. 385.4 is where they entered. 388 strike price for March 13th. Okay, so they're expecting a bounce. These people are not expecting a bounce. These are all puts, big money. 6.4 million for this, 2.9 million for that, 10,000 size, 7,000 size. This one 366 strike price, 365 strike price. Okay, they got some time on it. They both entered around 384.7-ish. Okay, that could be a pivot. And more puts. These came around 1:42 p.m. in the afternoon Eastern time. Both over 5,000 size, over 2 million premium sweep order. They both entered around 385-ish with a 375 strike price. March 24th expiration date, okay? But yeah, and then there's more puts towards the bottom. So overall puts for SPY still seem a lot of big money betting to the downside and some betting for a bounce. Triple Q, 62%. We are seeing some aggressive plays for calls. 62% for puts, but we are seeing aggressive plays for calls as well. All right. Interesting. IWM. 95% into puts. That's a big difference. Very lopsided. 86% for put. 86%. Over 86,000 contracts for puts. Well, compared to 4,000 based on 500k premiums, guys. But we are seeing lots and lots of puts here. Very aggressive. 165 strike price. Pretty popular for IWM right now. Okay. And they all entered around 174-ish. Yep. And there's more 170 strike price. They enter around 179-ish. Okay, a lot of big money bearish on IWM. Tesla, 81%. Seeing a lot of block orders here. I prefer seeing the sweep orders for the aggressive plays. A lot of block orders. But 81% for Tesla. Apple, 100% for puts. Only 13,000 puts. It's not a lot. But over 500K premiums. But yeah, 146 strike price, 145. This is a block order. This is 146. Okay. So still seeing big money betting to the downside. And the VIX should be seeing calls. 99% in the calls, guys. Over 94,000 contracts in the calls compared to 751. Holy moly. Seeing a lot of 24 strike price. Seeing a lot of 24 strike price, guys. All right. So I hope you guys found value in that. If you want more content from Uncle Charles, please consider joining my Discord. I have tiers now. So make sure if you join, read each tiers because they offer something different. And pick the one that you would find useful. All right. Thank you, guys. Peace.